Hello everyone, welcome to another episode of my video. In today's video, you're going to learn the right way to mark structure. If you want to master the art of marking structure the right way and identify market structure accurately, this video is actually for you. I'll break down the right way to mark structure so you can analyze price actions like a pro. Because understanding market structure is a critical skill for traders aiming to predict market moves and improve their trading strategies. And whether you're trading Forex, be it stocks or crypto, marking market structure or mastering market structure is essential to your success. And by the end of this video, you'll be able to take your trading analysis to the next level. So don't forget to hit the like button, share this video and subscribe. And stay updated with my latest trading tutorials and free signals. To join my Telegram channel, you'll see the link to the Telegram channel in the description of this video. So that's where I'll be posting more tutorials and free signals. So what you'll be learning online from your mentors. Market structure. Most people believe when price is creating series of lower highs and lower lows in the market. As you can see, this previous high is lower than this high, and this previous low is lower than this low. So that's what we call a bearish move in the market. If you haven't watched my previous video, you need to go and watch it. So to have the basic knowledge about this, I've already explained everything in the previous video. So anytime we have a break of low like this, what we've been taught is that we have a break of structure. That's what most people believe to be, and that's what even some professional traders believe, that anytime we have a break of low like this or a break of high in the market, that signifies a major break of structure, which is totally wrong. What others trader believe, or what you've been taught online, is that whenever we have a break like this, like I said previously, that we have a break of structure, and whenever price retrace back and break the previous high like this, we have a chop, which is totally wrong. But when you say whenever we have a break like this, price is creating downtrend in the market, you are not wrong. This is a series of higher highs and higher lows in the market. So this is just a downtrending movement. But any break we have here, these are not major break in the market. These are just internal breaks. So all the moves you see here from this point up onto this node, they are all internal structures in the market. All this break that you see, all this break of structure, all this break of low, let me just say break of internal structure that you see, these are just internal move in the market. So this is what I want to open your eyes to in the market. The real way to mark structure. How to mark structure like the smart money. So anytime we have a break of low like this in the market, we don't consider this as a break of structure. Though you can call it a break of structure, but ideally this is just an internal break of structure. It is not a major break of structure. You have another break of low here. You can just call it a break of low or internal break of structure. So it is not a major break of structure. So that's what you can call it. And we have another break of low here or internal break of structure. So I don't want to get you guys confused. I've just said break of low. So, but when you see here, we have a different but we have something different here. As you can see, immediately price break this low, and what happened? Price reversed from this point to took out this previous high. As you can see here, price reversed from this point to took out this previous high. So immediately price reversed and took out this previous highs. This low becomes what? This low becomes our major low. And as you can see, what happened here is just what we call liquidity grab or inducement sweep. We can also call it inducement sweep. So as you can see, what happened here is what we call the liquidity grab or inducement sweep. So why is it liquidity grab? Because immediately the institution induced people to sell from this point. This is what we call inducement. So immediately they induce people to sell from this point. All the retail traders stop loss will be at this high. As you can see, it will be at this high. So it will be at a particular point in the market the institution will reverse price to take out, to grab, or to take out all the retail traders that are selling from this point. They'll grab all their liquidity, all the liquidity sitting here. Remember, liquidity is also the same thing as stop loss. So they will grab all the stop loss, eat all the stop loss here, and grab all the liquidity sitting above these highs. So after they're done with that, and some retail traders might even think maybe we're having a change of trend in the market, and while some people will switch from selling on, and other traders will switch from selling to buying. Now all their stop loss will be at this low. Maybe they can be somewhere around here. All the stop loss can be somewhere around here or here, wherever. So, and the next minute, what you see is that price will reverse from this point. From this point, you see price reversing from this point to break this low. So, and immediately price break this low, this previous high we have here, it becomes our major high or our valid high. You can call it a major high or valid high. And this low, immediately price retrace back here to grab liquidity here or to sweep inducement here. This low becomes a major low. And immediately we have a break of structure, a ideal, which is the valid break of structure here. This is a major break of structure because you can look at this low grabs liquidity, and this low becomes a major low. And immediately price reverse from this point to break this low, then we have a real break of structure. So this is the major break of structure in the market, not this previous example like I showed you and I explained already. So immediately we have this major break of structure. We have price creating new highs and new lows in the market. Now I want to explain this. As you can see, we have price retracing from this point again one more time. Price pullback, went down, pullback to grab liquidity one more time or sweep inducement. So this low becomes a major low. Immediately this low, we price reverse from this point to grab liquidity at this high. Then this low becomes our what? A valid low, a major low. So now, and if price went down, as you can see, price went down to break this low, then this low becomes what? It becomes our valid break of structure. So this low becomes a break of structure. Now let's say we have a break of this low. Let's say price went down to break this low. Then we have what? We have a break of structure. And immediately we have a break of structure here. This high becomes our what? Our major high. So why this high becomes our major high is because we have a break of structure here. This high broke this major low, and this high becomes a major high. So now, what happens anytime price retraces from this point to break this high? That is when we have a valid change of character. So let's say from this point, from this high, let's say price went down, break this structure, and pull back to break this high to continue up. Then we have a valid change of character in the market. So same thing happens here. So if price retraces from this point after breaking the structure, this high becomes a major high, and price retraces from this point to break this high. This becomes our change of character in the market, valid change of character in the market. But let's say something happens, price doesn't break this high or this low. Let's just say we have something like this in the market. Price didn't take any liquidity here. Price did not sweep any liquidity or grab any liquidity here, and we don't have any break of low here. So all these moves are just internal moves. So if you want to mark your swing point, let's say we have a major high here. So this is how you mark your swing point, from this high to this, from this low to this high and back to this low. And this is not even your major low here, not until price took out liquidity. Let's say we have this. When price took out liquidity here, and this low becomes your major low. Now this is how you mark your structure, from this low to this high and to this low. So this is your swing move in the market. This is your swing. Everything that happens here are internal structures. As you can see, everything that happens here are internal structures. Now let's say after price grabs liquidity from this point, price doesn't break this low. If price does not break this low, as you can see, all these moves we have here are internal moves. These are not major moves. These are all internal moves in the market. The major points we have in the market, it is this low to this high and this low. So everything that's happening in this range, from this range, are all internal moves. So this is not a change of character. Even when price retraces back to break this high, it is not a change of character. Not until price went back to this previous high we have here. Not until price went back. Let's say we have this in the market. Price went down to this point without breaking this structure and retrace back to the upside. It is still internal structure. But when we have something like this, when price break this previous high in the market, then we have a valid change of character. I hope you understand. And if you have any question, you can write down in the comment section, or check the description of this video. You see the link to my Telegram channel where you can send me a DM so we can talk one-on-one. And if you want to join my mentorship class, or you want to buy my course, I have a ready-made course that I've created. You just send me a DM on Telegram so I can send you to link where to purchase the course. So here I would like to show us a real chart example of what I just explained previously. Price move from this point, breaking this high, reverse from this point, break this high, reverse to sweep this low, as you can see. If you look here, you see that price grabbed this low. We have a pullback here and price grabbed this low. So immediately price grab this low, price grab in we have inducement sweep at this point. So immediately we have this inducement sweep at this point. This high becomes what? This high becomes a major high. And price went on to break this point. So immediately we have a break of structure here. We have a break of structure at this point. So immediately we have a break of structure at this point. Now what happened? This low becomes a major low. And price continue like that to the upside. Now you see, price creates a new high here, and this low becomes our what? Our inducement, because this is the lowest point price reached. Aside from the major low we have here, we have another low here. The price this lowest point price reached before creating this new high. So this low becomes our inducement level in the market, inducement point. So now, and price failed to take out this previous low before going high, and our inducement shift from this point to this point. Now price to continue to create new high, new low, and new high, and break this high. Similarly, price break this high, this low becomes our major inducement level. All these are just internal inducement point in the market. This is the major inducement point, and we have our price retrace from this point to break this high. So immediately price break this high, as you can see, this point, this move is not inside of this move. As you can see, these other moves are inside of the previous move. All these moves from this point to this point, they are inside of this move. But when you look at this move, it is not inside of this previous move, as we have breaking out of this range. So price pull back here again, failed to take out liquidity from this point, and what happened? Price creates new highs here. So our inducement shift from this point to this point. So and price pull back from this point to grab liquidity from this point, and even multiple liquidity low and multiple lows from this point. So immediately price grab liquidity, this high becomes what? This high becomes our major high, and price continue to the upside. As you can see, price continued to the upside, went down a little bit, and went up to break this high. Now we have a valid break of structure. Now let's say price reverse from this point after breaking this structure. After breaking this structure, this becomes a valid low. Now let's say price reverse from this point to break this low, then we have a valid change of character in the market. So now let's mark our swing. So from this point, from this low, we have price creating swings from this low to this, from this side to this low, from here to here, and so on to this another major high we have here, As you can see, we have another major high that grabbed this liquidity. So this is how you mark your swing. Everything that happens outside of this major point are all internal structures. Everything that happens here are all internals. Everything that happens here are all internals. So this is our major point in the market. So now, as you can see here, same thing happens here. Price keep on creating new highs and new low, highs, higher low, higher low, without grabbing any liquidity points. And this low becomes our liquidity. Immediately we have a new high here, a new high here. This low becomes our inducement point. This low becomes our inducement. So now we have another highs here, and price failed to take out this inducement, as you can see. And even after breaking this high, our inducement shifted here, shift from this low to this low. Now price failed to take out this inducement, and price pulled back a little bit, failed to take out this inducement and go up and create new highs. So our inducement shifts from this point to this point we have here. So, and after that, price reversed from this point to grab the liquidity here, which is to sweep this inducement. So immediately we have this inducement sweep here. This high becomes what? This high becomes our major high. So this high becomes our major high. Now, what happened? Price continued to the upside to break this high. So after price break this high, this low becomes what? This low becomes our major low. So if price retraces from this point, let's say after we have a break of structure here, if price retraces from this point to break this low, then we have a valid change of character. But if not, we are still in upward trend. So price continue like that to the upside. As you can see, we have price reversing from this point to grab this little pullback. We have this little pullback we have here. There's a little pullback before this break of structure. We have little pullbacks here. So immediately price retraces from this point to grab this pullbacks we have and went up. So this high becomes what? This high becomes our major high. What happened is price went from this point to break this high. This becomes our break of structure. So immediately we have a valid break of structure here. This low becomes what? Our major low. So let's mark our swings from what I've explained previously. So if we want to mark our swing points, this is how we mark our swing point. Because when you even when you switch to higher time frames, this is what you see. You see price moving from this point to this point, and this high. Sorry, I forgot to mark this high. So this is our major high. So this is what you see. This is our swing point from here to here, to this point, to this point, to this point, and to this point. So this is our swing move in the market. And even when you switch to the high time frame, that's what you see. Because ideally price didn't follow just one single time frames. So as you can see, what happens here, price continues to the upside here, drops down to this point, and we have our inducement sitting here. This becomes our inducement point because we have another low. The reason why this becomes our inducement point, because we have price creates new lows before breaking the structure. So this becomes our inducement point. So this is the lowest point we have before, not lowest, internal low. We have new internal low here. Price creates new lows before breaking this point, but this is our lowest point, which is our major point. So this is our inducement. Price failed to take out this inducement and continue high and break this new high. So immediately price break this high, our inducement shifts from here to here. As you can see, our major inducement. The price went down at this point to break this high, and this high becomes our new inducement point. So this is our new inducement point. So these are new inducement points in the market. So immediately price retraces from this point to grab this inducement. So this becomes our major high. This is our major high. So now, and price went on like that. As you can see, even price went more further to the downside to grab all these previous lower points we have, because price doesn't follow one single time frames. Because this low that you see here, it might be a liquidity point on the maybe on the 1 hour time frames, and it might be a liquidity point on the, let me say, on the 1 hour or the 2 hour time frames. So that's why we have this kind of situation in the market. Price doesn't follow a single time frames. So our price continue like that to break this high. So immediately we have a break of this high. So our major high, so our major low shifted. We have our major low shifted again to this point. So this becomes our major low because this is the lowest point price reached before breaking this high. So now price continue like that. So if price retraces from this point, like I said before, from this point to break this low, this is when we now have a valid change of character in the market. I hope you understand. If you have any question, write it down in the comment section of this video. And I'd like to talk about the broker that I use. I use SNS to trade. And if you want to sign up with SNS, I'll drop a link for you to sign up. This is they are the best performing broker at the moment. I'll leave a link to sign up with SNS, the broker that I use, in the description of this video. When you sign up with my link, there are some benefits and some bonus and some other offers you'll be getting when you sign up with my link. So now let's move on. As you can see, we have another pullbacks here, but let's say before we have this pullback, we have other pullbacks from this point. But all these pullbacks, as you can see, they are all internal pullbacks because they are inside these large candles. I'm going to explain that maybe in my next video, so you just stay tuned. Make sure you subscribe to this channel so you don't miss out any of my future updates. So as you can see here, we have another pullback here because, as you can see, this price pullback here before breaking this high, this previous high. So this becomes our inducement point. And what happened? Immediately price retraces from this point to take out, to grab this to grab the liquidity we have here. This high becomes our major high. So this high becomes our major high. And our price continue up to the upside, failed to break structure here, and went down even more further. So they just went down here to grab this low, to grab more liquidity. So this is not a change of character. This is not a change of character. Don't make mistake. So this is just a pullback to grab, maybe to grab more liquidity in the market. This is not a change of character. Remember, our major low is right here. This is our major low. So until price went down here, not until price went down here to break this low, we are not having a change of character in the market. But if price went down to this point to break this low, this is when we have a change of character. But anything that happens from this point, anything that happens from this major high, immediately we grab liquidity here. Anything that happens from this point to this point are all internal structures, all internals. Our trend is still uptrend. I hope you understand. So now let's continue. And price retraced from this point here, went down, retraced from this point to break this high. So now this becomes our valid break of structure because this high point grabbed this liquidity. So immediately you have a break of structure here. This becomes a break of this major high. This becomes our valid break of structure. And what happened? This low becomes our major low. This low becomes our major low. And price still continue like that. We have this low as our inducement. And price continue, failed to take out this inducement, continue to the upside, and started reversing from this one. We have a little pullback from this point, and price grabbed this pullback because our inducement, immediately we have price reverse from this point and break this high. This little pullback here becomes our inducement. So our inducement shifted from this point to this point, as you can see. So our inducement shifts to this point, and immediately price retraces to took out this low. This high becomes our major high. This high becomes our major high. So price went down more further to the downside, go on to this point, retrace back to the downside. I think there's a consolidation period in the market here. So price went down and go up to break this high. See what happens here. We have a break of high here. So immediately we have a break of structure here. This low becomes what? This low becomes our major low. And price continue that way. Immediately price breaks structure here. We have our inducement here. This low becomes our inducement. Let's see. This is the last low price ever reached, because immediately price broke this structure here. We have our inducement sitting here. Let me see. Okay, so we have our inducement sitting here. Why is our inducement sitting here? As you can see, this low created this high. So this move is already outside of this internal move. And if you look, this low created this low created this new high point. Let me say, to the point we have a break of structure. This low is the lowest point we have. So immediately we have a break of structure here. This is the lowest point we have here. The lowest point we have. Let me just say the new lowest point we have. But now let's look here. As you can see, price reversed from this point again, broke this high, and our inducement shift from this point to this point again. So this low is no longer our inducement point. So this becomes our inducement point, our value inducement. So everything that happens here are just internals. Everything that's happening here are internal. As you can see, everything that happened here are internal. Even this point is still internal, but this is our valid. This is the recent. Let me just say the recent. So that you can understand, this is the recent low we have here. So this becomes our inducement, and immediately price grab this inducement, our major highs. This becomes our major high. And what happened? Price reversed from this point, grab this liquidity, and price reversed from this point to break structure. Price broke structure here. Now we have a break of structure at this point. So this low becomes our major low. Now this is why it's getting interesting, because we have a lot to explain here. Now look at this point. We have a little period of consolidation in the market at this point. And now look here. Price retraces from this point. We have price creating new high. Wait, this becomes our major low. And price went here, break this structure, and we have price pull back from this point. As you can see, price pull back from this point to break this low. So our inducement shift from this point to this point, as you can see. And so immediately price went down to grab this liquidity, to grab this immediately we have a liquidity grab here at this point to grab this inducement sweep rather. So our major high shift from this point to this point. So this becomes our new major high. So this point becomes our new major high. Now look, price failed to continue to the upside at this point, and price went down to grab this low, this major low we have here. Immediately if price break this low, this becomes what? This becomes our change of character. But what happened here? If you take a look at this, you see that immediately price break this low, we have only just one candle close below this point. We have no second candle close below this point, only one candle close. So this signifies a liquidity sweep in the market. So this is not a change of character, because sometimes the institution push price back to a certain point in the market just to grab liquidity. It might be to grab liquidity. And remember, I said earlier that price does not follow one single time frames. Price does not follow single time frames in market. So because when you stick to 15 minutes and you think like, so I'll keep on trading on the 15 minutes, and you don't go on maybe to the higher time frame to check what is happening on the higher time frame, because this point might be a 4-hour inducement point. So price doesn't follow one single time frame. So that's what you should understand. So price retraces from this point to grab this low. But if we have a second candle close at this point and price keep on going to the downside, this is when we have a value chop. But you can see what happens here. Price just went down to grab this major point to grab liquidity from this major point and turn again. If we have a break of structure here, then our low will shift from this point to this point, but price failed again to break this high, and price move also to the downside again. Now let's see what happened. So this low still becomes our major low. Now let's see what happens here. Price went down again to break this low, but we don't have another candle close. Price does not continue to the downside to create new candles. So this is also a liquidity grab again of major structure. And you can see what happens from this point. Price went up again to break this high. So this becomes our valid break of structure. So our major low transferred from this point to this point. Yeah, from this point to this point. So this is no longer our major low. So our major low has transferred from this point to this point. The reason why this happens in the market is because price doesn't follow one single time frames. And now everything that happened here is just external liquidity grab. As you can see, we have in the market, we have internal liquidity grab and we have external liquidity grab. So what happened here is what we called external liquidity grab. Price grabbing liquidity from the external point in the market. So now let's continue. I'll be dropping more videos, so this is why you need to subscribe so you won't miss out any of my future updates that I'll be dropping. And make sure you join my Telegram channel. It's very, very important. I drop free signals in my Telegram channel. So now look at this point. Price went down from this point, but before price went down from this point, immediately we have a value break of structure. Price create new low. Price pull back from this point, break this high, pull back again one more time and break this high. So this becomes our inducement point. And immediately price reverse from this point to grab this inducement. Immediately we have our inducement sweep from this point. Then this high becomes our major high. This high becomes our major high. Now see what happens. Price went down to this point and closed below. And immediately price closed below. Can we call this a change of character? No, because we don't have a second candle close. So we have another candle close here, so we can call this a valid change of character. When you have a price closing outside of your major level with one candle and the next candle reverse, that's what we called liquidity sweep in the market. So the institution pushed price to the downside here just to grab liquidity. So this is not a change of character. This is just a liquidity grab, as you can see, because it's just one candle close. If the next candle close below this point, then we have a valid change of character. And sometimes even when we have a valid change of character, price can still reverse because price doesn't follow one time frames. That's what I want you to have at the back of your mind. Price doesn't follow one single time frames, because this value low we have on the 30 minutes, it might be an inducement point on the 4-hour time frames. So that's why you see this kind of situations in the market. Now after price grab this liquidity from this major point, we have external liquidity grab again. This happened twice. We have an external liquidity grab here, and so also we have another external liquidity grab here. So immediately price grab liquidity, you see what's happening in the market. Price range a little bit in this area. So after price range a little bit, price failed to continue. As you can see, price is trying to continue to the downside here to create more candles to close below, to change this trend so that we can have a chalk here. But what happened? Price failed, and you can see this long wick rejection retrace back to the upside. And what happened? To grab this high. So after that, price went down again to continue. Maybe let's say this should be our inducement point in the market. Maybe price grab inducement here, but price failed again to break low to confirm our chalk, and price went up again to grab this high. So these are just little consolidation period in market. Price went down again, went up again, grabbing lows and grabbing highs at this point. And what do we have? And price went up to break this high. We now have a break of structure. Sorry. So let me just clear all this point in the market. So as you can see, we now have a break of structure. Now because this high is our valid high, and now this low becomes what? Immediately we have a break of structure, this low becomes our value low. So we never have any kind of stock here because we only have one candle close. We don't have any other candle close. So what happened here is what we call external liquidity sweep in the market. It actually happened twice. We have it here. And we also have it here. So we have external liquidity grab here, and we also have external liquidity grab at this point. So our major high, immediately we have a break of this high, our major low shifted from this point. This low no longer becomes our major low. So our major low shifted from this point to this point. So as you can see, I hope you understand this. If you have any question, make sure you write down in the comment section. Ask me any question you have. And if you want to upgrade if you want to take your trading game to the next level, you can hit me up on Telegram to join either my mentorship class where I train people to become a profitable trader, and also join my Telegram channel where I drop daily signals. So, and I also have a Redmi course that will guide you from the basic level to the advanced level where you become a profitable trader. If you want to have access to all these informations, don't just make sure you hit me up on Telegram, send me a DM on Telegram. Before price pull back from this point, before price retrace from this point, this is our inducement point in the market. This pullback here is our inducement point after this break of structure. But immediately price creates new high here, then our inducement shifts from this point to this point. Look here, price continued to pull back, went up here, pull back at this point, and break this high at this point. So immediately price break this point, our inducement shift from this point to this point. So now, immediately our inducement shift to this point, price retrace from this point and grab the liquidity here. So immediately we have inducement sweep here. This high becomes our major high. So now what happened? Price started retracing. Price failed to break this structure and started retracing. As you can see, price failed to break this high, so we can have a break of structure saying price started retracing. So some traders will believe here we have a change of character. No, this is not a change of character. Not until price went down to break our major low. As you can see, the major low we have here, this major low. Not until price went down to break this major low. So if price break this major low, then we have a change of character. But if not, everything that happens inside of this range are all internal moves. They are all internals. But when immediately we have a break of this high, then our low, then this low becomes our major low. That's when we have a valid break of structure. Immediately price break this high, then we have a valid break of structure, and this low becomes our major low. Immediately we have a break of structure here. So I hope you understand everything I explained in the video. So if you have any question, make sure you write down in the comment section. If there's any topic you want me to cover next on this channel, you can also write it down as well. Don't forget to use my link to sign up with the best broker that I recognize, HNS, which I used to trade. So this is the best performing broker at the moment. You see the link to sign up in the description of this video. Sign up with my link and also join my Telegram channel where I drop free signals and more useful content like this to help your trading journey to become a profitable trader. And to watch the next episode of this video, you see the link of the video popping up at the top right corner of your screen. Click the link to watch the next episode of this video. Until the next episode of the video, peace out.